Good evening, everybody. This is John Seville from Acorn Wealth, and this is your executive summary. Now, tonight, we're going to talk about a very exciting topic that's near and dear to my heart, which is the smart money. Looking at what is currently building in the stock market, there are some very alarming factors that show that the smart money is moving out at a rapid rate. Let's talk about the three main things: the pattern, the smart money, and the insiders. Firstly, the pattern. Now, I've got 2004 through 2008 up on the screen on a weekly chart of the S&P 500. And what we're looking at here is we can see that the pattern that basically was the main precursor for the big drop in 2008 was this big upward channel, followed by a head and shoulders right here, a second head and shoulders, and then a big drop. And what we can see is that this whole time, when this rally was building, we can see down at the bottom of the chart, we've got money flow up on the bottom. We can see that as the market was rallying up in this channel, money flow went with it until the head and shoulders started to build, and then we started to see this big drop in the S&P, as well as the money flow diverging right beforehand. Let's fast forward to current days. So what we've currently got is we've got the S&P 500 in this long upward channel building from 2011 to 2015, and all of a sudden, look at what's forming. We've broken down below. You can see once again down beneath the smart money or the money flow moving with that trend, and then all of a sudden breaks off right here, just as we start to peak and we go into that distribution zone. What does that mean? It means that the smart money is likely offloading their position to the public. And there you can see that head and shoulder building. Now let's fast forward into the daily chart and look at it a little bit closer. Now when we look at the daily chart, you can see that the S&P 500 was building in a rising wedge formation since the lows of February. What's a rising wedge? Bearish. And it indicates that the market is likely to break down from that pattern. And it did. And what we can see through looking at this pattern as we zoom in here, we've got what is building yet again is another head and shoulders pattern. Now on April 19th, on this day right here, I actually drew out, there we go, if we can get that to come up. I drew out this pattern with a pen to say this is what we likely expect to happen. We're going to test the 2120 level, break down, rally back up towards 2080, 2100, break down again, and then we're going to have potentially the start of what could be a very big drop. And you know what? When we have a look at that third and final thing, the insiders, it looks like they agree. Having a look at the insider buying and selling ratio from all of the sectors in the past 30 days, you can see that the red, meaning the selling from insiders, is incredibly outweighing the buying, which is the blue. So we could be in store for quite a big drop. And those are the things we look at for the smart money. Now, tonight, because of the current market events, we're going to be doing a very special webinar where we're going to be talking about how we put together all of this to predict where the market's going next, how serious is this situation, and also looking at some of the very best possible crash setups that we can optimize to make a lot of money if this market really does fall apart. So we hope to see you all tonight. Just simply click below to claim your spot now.